दोनों भी ना सेम चॉइस LIC।
LIC ट्रेंडिंग विद टाइम्स, 62 सालों से हर जनरेशन की पसंद।
Good afternoon, you're watching Countdown right here on Bloomberg. Bajaj Auto has just come out with its numbers and optically looks in line with street expectations, though there is a little bit of a margin miss this time around. Profits are coming at 1,152 crores. The margins are coming at 16.8 crores. Yatin Mota is joining us right now to break down these numbers for us. Yatin, what have you made out of Bajaj Auto's numbers?
Marginal miss, Devina, I would like to say, because if you look at the revenues in line with expectations, we had a 25% growth in the quarter for volumes, and that has culminated into a revenue growth of 21%, which means that they are down 4% on realizations. However, if you look at the EBITDA, that has grown only at 3% to come in at 1,341 crores, and this is largely to do with the fact that this time most of the auto companies which have reported the numbers have been facing commodity cost pressures. They have not been able to pass that on to their customers in terms of the price hikes. So probably the realizations have been under pressure. Margins, we were expecting a figure of 17.4%, and the deliverable in the second quarter by Bajaj Auto was 16.8%. So almost 60 basis points lower than the street expectations. And if you see the trend also, which is on your screen, it will clearly show you that the margins are at multi-quarter lows. In fact, the margins last time were at 17.3%, very close to the GST and demonetization levels. And these are the margins. 16.8% is the margin level, which is even lower than that. So we are talking about a multi-year margin level which is being delivered. So margins at a multi-year low. Net profit coming at 1,152 crores versus the Bloomberg poll of 1,140 crores. They have met profit and top line, but clearly on the operation front, the pressure persists on Bajaj Auto, and probably that explains the reason why the stock is down almost 4%.
All right, and I think Ankit Merchant of SMC Global Securities is also joining us on the phone line right now. Ankit, your initial take on Bajaj Auto numbers?
So on the revenue front, it is pretty much in line. But where we are disappointed is basically the EBITDA margins, which has dropped close to 285 basis points year over year. So that's really a worry point. The street was estimating EBITDA margin of close to 17.5%, and we were a little more optimistic at near about 18%, 18.5%. So on that front, we are quite disappointed looking at the EBITDA margins. And the one reason what we can definitely see is basically the COGS, that is cost of goods sold, that has gone up to 72.4% in this quarter, and it was 69.1% year over year. So that's quite, that's close to 300 basis point jump in the COGS itself. So that's really one worry point, and that is the reason stock has been, getting beaten right now. And whereas, the other income is concerned, they showed a good amount of, improvement in their other income, which has led to this, profitability or the PAT, coming in line. But as such, if we have to take that out and normalize it, then I think these are very these aren't very encouraging numbers which the street will like. In fact, the TVS results yesterday were quite better, I believe, than Bajaj Autos right now.
Okay, and Ankit, Yatin also joining in the conversation. If you could tell us how really do you see Bajaj Auto as a stock moving forward, because there have been pressure on domestic growth. Export and three-wheelers, has been coming on a very large base, and there the company has done extremely well in the second quarter. But despite the exports picking up, three-wheeler sales picking up, they have not been able to deliver on margins. So would you change your rating on the stock, and how really do you see the target price shape up for Bajaj Auto post the second quarter results? Would you be revising it on the downwards side?
So we have a con call scheduled. Suppose that, we can take a call regarding what is the management strategy. But definitely I can, looking at these numbers, I can definitely say that we could be revising it. And we had a target of 3138 on the stock, but we'll soon revise it because these aren't the margins which we have worked on, and we will further try to investigate about how the margins can be moving forward. Yes, volume growth has been there. They have been able to increase their market share as it has been said in their press release as well. But gaining it at the cost of your EBITDA margins, which were the best amongst the class, has really impacted the sentiment as such.
Okay, thanks Ankit for giving your view. We are also joined now by Mitul Shah of Reliance Securities. Mitul, thanks for joining in. What do you make of Bajaj Auto results?
Certainly, result is below expectation, but we believe that it is not highly disappointed as management has already indicated similar drop in margins in previous con call and various occasions. Company has highlighted that they would prefer market share gain over the profitability over medium term. So result is slightly lower on majority of the parameters, but going forward we expect improvement considering the higher export realization at higher exchange rate.
Okay, thanks Mitul for giving your views on Bajaj Auto. So that was the view of Reliance Securities. Of course, the results are disappointing, they say, but they expect some recovery in margins moving forward. Neeraj?
On a valuation parameter, Yatin, how does it stack up versus the others? Because I thought TVS numbers looked reasonably okay. That stock gained a little bit in yesterday's session before coming off today as well. And Hero is out as well. So we'll do a detailed analysis later, but prima facie.
On the valuation front, TVS is the most expensive in the two-wheeler space. Bajaj Auto and Hero MotoCorp both have corrected a lot. So they are in that 18 to 20% 1 year forward kind of a price to earning multiple. But Bajaj Auto, the thing is that they have delivered a year-on-year decline in margins by 300 basis points. So 3% lower margin year-on-year. More importantly, on a sequential basis, also the margins have fallen by nearly 0.5%. The margins are at multi-year lows. The management always, was sticking their neck out and talking about, maintaining EBITDA margin levels at, 18-20%. There were times where they delivered well above that mark, but clearly disappointing operating performance of Bajaj, and that is what the market is concerned about. You always, gave Bajaj a better multiple over, Hero MotoCorp for the only reason because they delivered on the margin front. In a quarter wherein you have a growth of 30% plus on exports, 30% plus on three-wheelers, and you disappoint on, the margin front, it means that the pressure on margins is clearly there on the motorcycle business. You can't have lower margins on three-wheelers. The management always reiterated that you cannot have lower margins in exports. So the clear, doubt or the market concern is on the motorcycle business, which probably must have delivered very low margin numbers.
Okay, and I'm sure Yatin will analyze this for us on First Word tomorrow. But Yatin, thanks for putting this initial thing into perspective. That's Bajaj Auto for you down in the session. Just before we get in the management of Radico Khaitan, I want to mark that the indices are now in the red. The Sensex is down about 23 points. The Nifty Bank about 0.25% lower. So all the gains wiped out by the end of trade. Radico Khaitan though, the numbers look reasonably decent. Revenues up 15%, but the EBITDA numbers have improved quite substantially, and which is why you saw a bit of a flare there on the stock price. Margins at 17.8% versus 14.7%. Let's get the management and discuss the quarter gone by. Mr. Dilip Banthiya, he's the CFO of the company, joins us right now on the show to talk about the numbers and the outlook ahead. Mr. Banthiya, thanks so much for joining in. I hope I'm pronouncing your name correctly, sir.
Yeah, of course. Good afternoon, Neeraj.
Okay, good afternoon. Put this quarter into perspective. Let's first talk about the top line, because I know the impressive numbers are the bottom line and the net profit numbers. Also want to talk about the E&A thing. But would you be satisfied with this 15% top line growth, or would you have hope for more?
So this is a satisfying number, and actually Radico Khaitan has performed on all front in all around performance. Right in the volume, where our prestige and above segment has grown by 14.6%. Regular segment by 10% plus, overall volume by 11.5, the top line at 518 crores at 15.5. So we have done pretty well on, and we have done better than the industry and gained market share. The revenue, the gross profit has also jumped by 24% in this quarter, and the gross margin has been 50.1%. which is in line with our expectation as we are doing premiumization and strengthening our premium portfolio and product mix. So the EBITDA margin is a reflection of the various factors, which is including the price increases happened in last year in southern states. So there's a full year impact in this quarter, and the sort of softening of raw material prices and ongoing premiumization happening. Moreover, the Uttar Pradesh policy, which has been opened in April 2018, has also given a lot of boost to the industry volume, and where the Radico Khaitan has significantly outperformed the other market players and have got the market share, better market share. The volume in UP industry alone has grown by 40% plus in the first half of the year.
Interesting. You mentioned a volume growth of 11% and gross margins of 50%. Now, is this the volume growth number that you're working with the last quarter, the quarter before last that when we spoke? And just speaking at your peers, you believe that the second half could have a higher volume growth coming in as well?
Yeah, generally speaking, the second half is better than the first half because of the festive season, the winter coming in, and the lot of activities, and so we expect second half to be also better and in line with our first half.
So what's the outlook on ENA pricing for you, and in the second half of the year, do you see that as being a risk?
So the ENA are mainly on account of two raw material. One is the grain and another is the molasses. So grain-based ENA is in a benign in this thing. There is not much increase into that. However, the molasses prices are softer and very low, and that is being used at a regular category product. So that is also an advantage in this period, and I see that the sugarcane production is going to be still better for 18, 19 and 19, 20. So we expect the scenario to be favorable for Radico as well.
Going forward, sir, into the final 2 quarters, what do you expect to be growth catalysts for yourself?
So growth will come from IMFL segment, where Prestige and above segment will continue to grow at 15% or so, and the overall volume growth in double digit, the operating margin and gross margin to be in line with what we are achieving and delivering. So we are expecting fairly good consumption, and I think the industry scenario is very positive for Radico to grow its portfolio.
Mr. Banthiya, would you be happy with the current capacity that you would have, or would you be looking to expand your capacities as well? A few of your peers have announced these plans.
Yeah, so basically our distillation capacity is good enough for us to continue with the same. We have no plan to increase our distillation capacity.
The utilization levels be currently out there?
Something around 95% is there on ENA side. However, the bottling, which is generally being done through a third-party bottling tie-up, that is available in every state at a price. So there is no need for us to do capex on that.
Okay. So, and yeah, I believe with the credit cycle looking the way it is, maybe capex might not be the best idea too. But just wondering, how do you envisage volume growth to pick up meaningfully, if not in the next 6 months, then beyond that, if indeed you do not plan to have a fresh capex plan going? And what are the numbers that you'll be working with? Would you believe 10-15% volume growth, steady state could be the order of the day for you as a company for the next 6 quarters at least?
Yeah, so we can very well, we have a plan that we grow in double digit in our volume, where Prestige and above category will grow faster than the regular category. And based on our internal plans and all that strategy, so we continue to deliver the top line growth of between 12 to 14% in this year and next year and thereafter also. Moreover, actually the current scenario, after the lot of headwinds industry has faced, so we are seeing that consumption is returning back, and our industry is also giving, which was not growing for last 3-4 years, is also growing in 8-9% bracket. So we expect this to continue. At the same time, what decision as a strategy we have taken 3-4 years back, so that has been paying very well. Like we have reduced our debt by 200 crores in the first half of this year, And overall, in last 30 months, 2.5 years, we have reduced our debt by 577 crores. So this free cash flow is also giving, and the balancing strengthening and all that, is also giving us the real power to invest behind the brands. So we are investing behind the brands, and in the prestige and above category, we would continue to do so for a future growth potential.
Okay. I believe you already demonstrated by the margin performance that there is no risk to margin despite rising ENA prices. Would you reckon you'll be able to maintain this 16.5%, 17.5% EBITDA margin mark, even if the ENA prices were to move up post-December?
So we are expecting like this year to margin to be improved by 200 basis plus. Okay, and the next 2 years after that in the range of 100 basis point every year. That is what our plan and internal working is. So
you've done, for the quarter, you've done about 17.8% EBITDA margins, if I'm not wrong.
That's right.
Would you look to maintain this 17% mark as an average for the year, or would it be slightly lower?
It is like it depends sometime on the product mix and all that. But as I said, that the margin for the first half is in the range of 17.5%. But we would continue to do like 200 basis point plus for this year and 125 basis point a year, so that we come by 20%, near to 20% by 2020-21.
So you said you're reducing your debt and you are seeing considerable free cash flow for yourself as well. Any plans to put that free cash flow to use, or that's primarily right now just for the purpose of reducing the interest cost?
Yeah, so first of all, the primary beginning, we are doing this reduction in our debt, and there are by reducing the interest cost. In the first half itself, the interest has gone down by more than 40% as compared to the same period last year. And after that, once we get debt-free, then we will see how to utilize the free cash for the better interest of the shareholder at large.
What's the debt reduction plan for the rest of the year?
We have done 200 crores, so I think next half also we are going to do a significant debt reduction, and in a couple of years the company will have a total zero debt and will be with cash surplus sitting in my balance sheet.
Okay, got that. So we'll leave it at that. Thanks very much for joining, and appreciate you taking out the time and highlighting your earnings performance this quarter. That's the management at Radico Khaitan highlighting the numbers for us. Well, the other pocket to watch out for is obviously the paint space, and we've been tracking the pricing performances of most of the paint companies post numbers. Yesterday, Radico Khaitan and Asian Paints had a very soft day of trade. Asian Paints was down a good 6%. Radico Khaitan for 2 straight days post its numbers has been seeing heavy knocks in terms of the pricing performance. Obviously, the input price, the crude oil prices being on the higher side, has weighed down heavy in terms of their earnings performances as well. Let's discuss all of this and more and talk a little bit more about the sector. We're joined in by Harit Kapoor from IDFC Securities to take us through what's been plaguing the sector as a whole. So 2 big numbers that came out, Asian Paints, Kansai Nerolac reported numbers. What's your sense, Harit, on how to approach this sector and space now?
Yeah, hi, good afternoon. So if you look at the results which have come out yesterday and the day before for Kansai and Asian Paints, I think a couple of things are very clear, that the pain of the higher crude as well as the rupee depreciation has started to hit paint companies severely from Q2 onwards. The challenge really has been that post the GST tax cuts, companies were hesitant to take price increases immediately, as they would, they were fearing that they would come under the anti-profiteering lens, and hence they've had to delay their price increases. The first of them has come in October on the decorative side. From 1st October, price increases are to the extent of about 2.5%. The way we look at it going forward is that we believe that though in the near term, margins will be under pressure, but sequentially we expect margins to improve as price pass-throughs start to come into the space. And we believe the October 1st price increase is the first of many, as companies start to pass on with a lag the pressure not only from crude prices but also from the currency depreciation, which affects their imported raw material cost.
Is there a change in the demand for for home improvement as a sector right now, and whether or not we see a dip going forward in spending within this category?
So if you look at the volume growths for the two companies that have reported so far, Asian Paints and Kansai Nerolac, on the decorative segment side, you've seen double-digit volume growth continue even in Q2, and this is in spite of a shift in the festive season to an extent. As far as the commentaries go, demand seems to be stable on the decorative paint side. However, on the industrial paints side, which includes auto and general industrial coatings, there is a bit of a weakness in demand which could affect the paint companies. However, if you look at the skew of industrial paint share, Kansai has a higher share versus Asian Paints, and Asian Paints' share on the industrial side is quite low at about 10 to 15% of the overall revenue mix. But if you look at overall consumer demand, it's fairly stable as of now. And going into Q3, which is the festive season, initial signs are that there is no real reason for concern in terms of lower demand or so. So we are factoring in a stable early double-digit volume growth on the decorative side for the paint companies.
Would you see a meaningful difference in the retail side versus the industrial side at this current juncture? I mean, if you're taking a look at Asian Paints and Kansai and the different spaces that they're more prominent in.
Yes, so there is a difference between the decorative and industrial side on two counts. We feel that in the decorative segment, the volume growth is more stable. And it is more consumer demand led. The industrial volume growth is more B2B led, and it is a function of how the user industries actually operate and what their demand is. Also, as far as price increases are concerned, it is easier to pass through price increases on the decorative segment as compared to the industrial segment, as the industrial segment is a more B2B segment where the negotiations happen over a period of time with the buyers, and the price increase happens with a greater lag as compared to the decorative segment where companies just pass on the retail price increases faster. We believe in a rising crude oil environment or a high crude oil environment, as well as in a scenario where currency has depreciated, it is better to play companies where the share of decorative paints is higher. Hence, we believe the Asian Paints is the best play in the paint space currently, given their pricing power leadership, as well as the fact that their skew to the decorative segment on the revenues is far higher than the other players.
Just one small question. Conversations with people in the real estate industry seem to suggest that the metros, city like Mumbai, etc., have a glut of real estate supply ready, which might, at least in the luxury segment and the upper middle class segment, which might not see enough sales. Now, my question is, do you reckon that a company like Asian Paints, which is more premium in nature, could face that issue cropping up in the next 12 months, that demand which was hitherto robust in the luxury segment and upper middle class segment will see a bit of a tapering off, and that might impact volumes?
Yeah, I agree with the fact that the premium segment on real estate could be under stress. But if you look at Asian Paints' business, we believe that the project sales business, which is the new construction-led growth for Asian Paints, is a very small proportion of their overall decorative sales. In fact, the bulk of the growth or the bulk of the revenues for Asian Paints, or for that matter the industry, comes from repainting demand. It's basically consumers repainting their houses. So we don't believe that there is a huge impact on account of that, which is likely. Also, if you see, the bulk of the growth has come in tier 2, tier 3 towns anyways over the last 2 or 3 years. Metros have literally grown slower than tier 2, tier 3 over a period period of time. So the fact that project sales, which is new construction sales, are a very small portion of the overall sales for these companies, and the fact that the demand centers have anyways been more tier 2, tier 3 led as compared to metro led, we believe the impact, if any, will be minimal going forward.
Okay. We haven't spoken as yet about crude, though I must admit it's no longer at 85 and therefore loses its relative relevance in that sense. But how big a factor would this be over the course of the next quarter, at least, if not more?
It's a very large swing factor. If you look at from Q1 to Q2, there was a significant inflation in crude, and if you see paint companies, they suffered on account of that. As you come into Q3, with crude oil prices actually coming off by more than 15% from their peak, close to 13% from their peak of about $86, $87. There is a respite which will happen to, in terms of margins for paint companies if they stabilize at these levels. If they stabilize at these levels, you will see the sequential benefit of that, probably not in Q3, but in Q4, as the inventory, impact starts to, low-cost inventory impact only starts to come in from Q4 onwards. On the price increase side, as I said, October, there was a 2.5% price increase that was taken. We believe that there will be more price increases to follow. And as price increases follow, and if crude prices don't go up from here, the margin, the recovery of margins will be that much faster, which will lead to a better earnings growth outlook in the near term.
So, Harit, we haven't seen Berger come out as yet, but with the information that you have at hand, what would the overall stance on the paint space be? And if you can share your pecking order, what would that be?
So we believe over the longer term perspective, the paint industry is a very attractive industry given the penetration and premiumization potential here. Hence we believe that the top 3 paint companies will be the largest beneficiaries of this growth in penetration and premiumization. Further, the cut in GST rates from 28 to 18%, drives incremental share gain to the organized segment, which is anyways large in this space, but it just exaggerates that impact. So we're positive from a longer term perspective, as we believe that stable volume growth as well as pricing power is there in this segment. We believe that, as I said earlier as well, given the current scenario of rising of commodity prices at high levels and currency also playing spoil sport, we believe the best play in this space is Asian Paints, given the fact that its skew on decorative is very high. It's the market leader, and pricing power is in their hands, at least on the decorative side. For Kansai, our understanding is that the share of industrial is a little over 40%, and for Berger the share of industrial paints is over 20%, is what our understanding is, and we believe Asian Paints' skew is much lesser than that, and it allows it to gain back the lost margin as well as drive steady volume growth in a much more easier manner over the medium term. Hence, we prefer Asian Paints in this space.
All right, Harit, we'll leave it at that. Thanks so very much for joining us. Really appreciate you taking out the time and giving us your perspective on the paint space as a whole. Well, back to the markets then. For the Nifty, we are in the red, and so is the Bank Nifty, marginally though, but giving up from the highs of the day. We were up almost 1% to 1.2%. From there, we've given up almost all of those gains. Manav Chopra of Indiabulls Ventures, he's joining us on the show right now. Manav, good afternoon to you. What's the call on the index now? It looks like we're finding it difficult to sustain, even though we open with a gap up, but it's the weight of the bears that once again brings it right back down.
See, the most importantly, we have seen a series of decline in the markets, and the prices are now nearing to its important support clusters. So, looking at a lot of chart evidence that I have brought in, it's the time right now that one need not go too aggressive on the shorting positions, but one should start taking selective contrarian bets. So we can see the chart of Nifty on the weekly perspective. This is the decline that we've seen on the Nifty, and it has tested its crucial support clusters. Now, this support clusters is a combination of a rising trend line drawn from 2016 lows, and this is 1 year horizontal trend line. So you can see the prices are right now hovering at these support clusters together, and also the prices have seen a good reversal from its oversold levels. Most importantly, on a short-term time scale, the prices have also formed a double bottom. So in all, at such a juncture where the prices are showing some sort of a positive divergence on the momentum, this is the time where one need not go too aggressive, because the chances of a pullback rally or a retracement rally is quite high. Another thing that I like to point is, last 2 months has been a very bearish month in the markets, and the India VIX has rallied by 30% and 25%. Previously, when such formation happened was in 2016, and the markets roughly bottomed out. So, it has been 2 months of decline, and the markets are also at the support clusters at oversold levels. So, in all, it is suggesting that one should start looking for some buying action at the current levels, and eventually the immediate
levels on the upside do you expect if this cluster is taken out?
Yes. So, once if we take the 10,400 levels, we are currently anticipating that to eventually happen. We will see a retracement rally of at least 50% of the recent decline, which comes to 10,750 levels, and eventually 11,000 levels are also due on card. So since there is a lot of short squeeze pattern observed on the short-term time scale, I think we will see a sharp short covering rally coming soon.
All right. The other interesting part is the movement of the bank Nifty on a weekly basis and how you read into that. In fact, that chart should also come up on your screens, and whether or not this cluster formation works here as well, and any other indicators that suggest a reversal here as well.
Yes, so this chart has been in a channel pattern, and we see a few weeks back there was a strong bullish reversal candlesticks at the channel formation, which further confirms the overall formation. And most importantly, the prices have not breached the low of the formation, so which further indicates the underlying bullish bias. And also we don't have that indicator, but the overall structure of the chart indicates the prices have tested its long-term support bullish line, so which indicates that the structure is still intact. We may definitely also see a good move from the current levels. I think on the immediate basis 26,200 to 26,500 is the levels that we are seeing. It's similar to Nifty, which is roughly around 50% of the retracement level.
All right, so both for the Nifty and for the Bank Nifty you are seeing a retracement. But let's have a comparative analysis as well on the Nifty and the Bank Nifty and see how we're positioned overall.
Yes, so so we have two charts. One is the Nifty and the Bank Nifty. What we are seeing is some sort of a divergence that has happened in place. Nifty recently formed a new low, which happened yesterday, whereas the Bank Nifty has not confirmed that. So this is a divergence pattern. If we see the top that was actually made, Nifty was forming series of higher highs, but the Bank Nifty did not form that, and we saw a series of declines. So this is a divergence pattern which is also happening at the support clusters, which is further confirming that the internal strength in the Bank Nifty. And eventually we expect Bank Nifty to take this rally going forward, because there are a lot of stocks and the stocks within the sector are in very deep oversold levels. So I think the Bank Nifty would be the sector to look out for. Once Bank Nifty closes above 25,200 levels, I think we can swiftly see a rally of at least 1,000 points coming in Bank Nifty. So one has to start taking out of the money call options. I think that would be the time, and the overall
so
time.
Out of the money, if you would give us at what strike?
So I think 25,800 would be the strike that one can start buying for the November series, and November would be a month for at least a relief rally for the bulls, because last 2 months has been bearish, and even the time series suggests that November could be a revival month. So if we analyze, all the patterns are coming to a structure whereby it's a time to take a contrarian bet in the market.
All right, so bullish on both the Nifty and the Bank Nifty, hoping for a retracement there, Manav, Chopra. But let's talk about the overall breadth of the market and how you're analyzing that in terms of specific stocks. And obviously, if you're seeing the index taking a move on the upside, contributors coming in from there.
See, I think we will see a good move coming from the NBFC space. A lot of the NBFC stocks have already seen a series of sharp decline. When I look at the chart of Bajaj Finance, which is an important constant in the Nifty 50, it has formed a very good bullish formation on the weekly perspective, and it is forming a very good base around the levels of 2150. I sense, the stock is very well poised to see a rally towards 2,600 eventually, and from the NBFC space, this would be the stock to look at. Pharma is another pack which is also seeing a very good bottom formation. It has seen a very good breakout after 3 years of decline. Stocks like Dr. Reddy and Cipla are forming a very good base formation. I think this is going to be a defensive pack going forward, irrespective. From the banking space, since we are bullish on banking, Axis Bank is one stock which is looking looking very good. After a good monthly breakout, the stock is forming a base, and eventually it is all set to see a rally of another 8 to 10% in the short term. So in short, I think one has to take a mixed approach from the pharma space, but from the banking, I think the private banks would lead in the near term.
All right. Neeraj, what else are you spotting in the market?
Well, interesting. So, yeah, those are some interesting charts, and we'll talk about some of those stocks as well. But clearly, that one stock that you guys were talking about, Bajaj Finance, certainly looking like revving up. It's amongst the top gainers on the index today. Should pull up that stock 8% higher and counting. So, really good show being put up by Bajaj Finance in the session today. That aside, just pull up Bajaj Auto. Somehow it's not having a great day. Bajaj Finserv too was amongst the top losers in today's session. So the Bajaj trio, and different families of course, but the Bajaj trio is kind of hogging the limelight today. But Bajaj Finserv's recovered a little bit of loss ground, but Bajaj Auto clearly down about 4.5% in trade. Yes Bank is now at 204. So that whole rally all the way to 250 and getting to about 1.4, 1.5 thereabouts, slightly over that in terms of valuation now, pulling back for Yes Bank. Grasim is down about 3%, Adani Ports about 2.5%, not the best of reactions to its numbers. Bharti Airtel, strong show, and all marketing companies, strong show. No surprises thereof. Amar Singh of Angel Broking with us on the show as well. Amar, good afternoon. Thanks for joining in. How are you approaching trade on the benchmark indices right now? If one were to be wanting to trade the Nifty or the Nifty Bank for the current expiry, what would you advise?
I would say that overall what we are seeing is that weakness definitely persists in the indices, because at higher levels again we are witnessing selling pressure also. If you look at today's movement from upside, they were selling, but what we are seeing is that downside towards 10,100 that is acting as some sort of support, and there is some sort of bullish divergence happening on both the indices, wherein Bank Nifty is better placed as compared to Nifty. So I would say that still the trend being, I would say, intermediate term trend being extremely bearish. So that's the reason any pullback will be used as a shorting opportunity. So the levels to watch out for if one wants to go short at higher levels is somewhere around a pullback towards 230, 240. That can be a good level to short. And the stop loss above 300 levels, and a target of 10,100 on the downside. Because Nifty continues to be bearish, and I would not go for a buy in this market right now.
Okay. Amar, what about specific stocks for the afternoon?
I would say among the specific stocks, the first one to look for is Z Entertainment. What we are seeing here is that Z has did bounce back from almost 400 levels to 470, and then again it is correcting. And technically it continues to be bearish on the charts. So long-term charts are also extremely bearish, and short-term, yes, it is showing some signs of, I would say, consolidation, but still I would say that going with the flow is a better option. So any pullback in Z Entertainment towards 435, 438 levels, that can be a good level to short, with a stop loss of 447 and a target of 419 on the downside. And the other stock to look at is TCS. TCS is, I would say, on the buy side. What we are seeing in TCS is that TCS is very close to its crucial support zone, and it continues to be strong on the long-term charts. On the weekly, yes, it is in oversold territory. On the daily, it's weak, but there is a possibility of a bounce back in TCS. So any TCS can be bought at current levels with a stop loss of 1809 and a target of 1937 on the upside.
Okay. Okay. Manav, you shared with us your ideas. Maybe you want to share the levels that one should monitor?
Of course. So at the current levels, Axis Bank look good. We were just discussing it has important support around the levels of 550. The stop loss for longs would be at 545 on the lower side for an upside target of 600. From the pharma, Cipla is very well poised. It has given a breakout on the monthly charts, and it has forming a good base formation, a stop of 590 on the lower side for an upside target of 680.
Interesting. Okay, let's get in a fundamental view going on the show as well.
Today.
Sorry?
Said it's house full today.
It's house full today. It's house full today. Is it the movies also releasing? No.
No.
Okay. Bad one.
Thank God for that.
Okay. Gurmeet, Chadha, Complete Circle Investments with us on the show as well. Complete Circle Consultants, excuse me. Gurmeet, good having you. Thanks so much for joining in. There seems to be some bit of separating of the wheat from the chaff. All NBFCs are up, yes. but the ones which have posted stronger numbers are bouncing back strongly. Bajaj Finance, a case in point. A couple of others have done reasonably okay, but FinServ has bounced back from the lows, but not everything is doing well. And now that we've had a chance to analyze what companies will do well, what companies won't do, are you making recommendations to your clients to get into that pocket? It's a bit of a minefield out there.
So, Neeraj, I think the quality names, yes, but as I said earlier, very gradually. I think the arbitrage trades are out. NBFCs which were using arbitrage, so let's say an Indiabulls or a Diwan Housing or even an HDFC or an REC, they were all borrowing at the same rate, 830, 840 about 3 months back, which wasn't fair. Now they borrowing at 10.5 is also not fair. So I think some normalization will come. We've already seen, I was speaking to some CIOs of debt funds. A minor tap has been opened for CPs because earlier the liquid funds were a strict no for CPs. So I think the ones with retail franchise, granular deposit base, so let's say HDFC Limited has 1.8 million depositors. Bajaj Finance, we saw how the retail deposit base has picked up. So anyone which can demonstrate growth, granular retail franchise, I think is something which one should use. But as I said, once there is a storm, you should not try and be too brave about it. Just gradually get into it. If you find some mouth-watering valuations, say something below 2,000 for Bajaj Finance or below 5,000 for a FinServ, or even HDFC around 1,600 levels, I think you can gradually add, because when the fear strikes, it has no level, but the behavioral finance comes in. You then are not able to buy the right quantity at that price. So gradual buying is what is recommended. We are saying a interesting 40-40-20 thing. It is 40% till state elections, 40% between state and general elections, which is till May, and 20% cash in case something globally doesn't go your way.
Sell out 40% of your portfolio or invest 40%?
The additional liquidity, obviously.
Today, housing finance companies also actually are doing okay for themselves. So Canfin Homes, Repco Home Finance, these are stocks which are up close to 9%, almost 10% for a Canfin Homes. Repco Home Finance is up 4.5%. So within the NBFC pocket, is this a likely good enough space?
Yeah, so Canfin also, because of the results, I think had a very good set of results. Also, I think there are talks of RBI easing some, probably giving a separate liquidity window. We've seen government officials talk about, giving relaxation in few norms. So I think it's a combination of some good results in this and some liquidity support coming from the regulator.
Would you trade on a Canfin at 243, Manav?
Yes, in fact, for a very short-term perspective, Canfin Home since last 10 days, it has been forming a good base support around the levels of 220. Last 2 days, volumes has been above 50-day average volumes, which is indicating some sort of a reversal formation at the lower levels. Once if the prices closes above 250, I think a very sharp move towards 280, 290 will not be ruled out. So at the current levels, one can definitely initiate long positions, keep a stop at 225 on the lower side.
Amar, the cement counters, the likes of an ACC, Ambuja, what would you do with this space as a whole right now? And is there any particular picks from this space, even in the mid-cap side?
Looking at the cement stocks, I would say first talking about ACC, it continues to witness selling pressure, and technically it continues to be bearish on the chart, but ACC on the downside has got extremely strong support coming in the region of 1320, 1350. So there is a possibility that the stock could bounce back towards 1430, 1450 levels. But otherwise, the trend still remains down. And looking at Ambuja, if I look at Ambuja cement, what I see here is that this stock is also continues to remain bearish. But this is, I would say, here the selling pressure is there. And the stock has got some support around 190 odd levels. But overall, I would say rather wait for getting into the cement stocks, because still there is further downside to the stocks, and it could consolidate, because if, for example, Ambuja Cement breaches the 185, 188, 190 zone, then it could head significantly lower. So I would say rather one should wait for some consolidation here.
There's a bit of there's a smart pullback, of course, that's happened in the oil marketing companies. So while they got beaten down, HPCL, for example, to 170, 175, from there to about 235, that's a remarkable pullback for somebody who managed to be a brave heart and park money in at those levels. I think you were just discounting the marketing business completely at maybe 200. At 170, there was just a bit of a distress out there. Look at that bounce that has happened into an HPCL from those 165, 170 odd levels. Similarly for a BP, similarly for an IOC. And today's gains, of course, add to some of those some of that movement to HPCL. Incidentally now, toying around with Bajaj Finance for being the top gainer on the Nifty. Before we get in a chart view, Gurmeet, fundamentally, for the brave heart, maybe it was a no-brainer at 170 HPCL or an IOC at low levels. There's a 30-35% uptick from those levels. What do we do here now in the oil marketing companies?
See, I mean, still at this price, it's less than book value or closer to book value. And, you know, so you have to have a view on oil, you know, over a tooth. So on a medium... Which
is difficult, right?
Yeah,
which
is
very
difficult
to have.
But, you know, Neeraj, if you take a short-term view, it's difficult. But if you really were to plot oil on a 3 to 4 year basis and think of the current spike in oil, it's largely because of the disruptions, whether it was Venezuela, Iran sanctions. It was not really the demand supply. We've seen US inventories rise. My sense is that avoidable for a month or so till the oil settles. It's below about 75. I think around 70, 72 is when that 1 rupee absorption and the inventory loss will probably kick in. So if you see further, it could be a good trading call for now. You know, you can watch oil and then, you know, intraday charters can tell you. Fundamentally, I think maybe a month away, and if oil settles around 70, 72, see, mind you, both HPCL and BPCL, the ROE is 25%. HPCL is also a lube-based, the largest refinery, which is a lubricant-based. It's a great marketing infrastructure. So it's not that everything is only linked to you know, the margins as such. So once it settles down at an equilibrium, whatever that price is, and that's the time to really get into it.
Yeah, I think the worry is probably that everybody knows that the businesses are moats, and maybe we'll get Manav in to look at those charts as well, maybe crude or maybe actually OMCs and how they're looking on the charts. But everybody knows that the businesses are great. There's a moat around the business. Nobody's going to come in. Sure, BP and RIL may start off 2,000 pumps, but that's some time out, right? Yeah. So the business is there and secure. The government intervention kind of brings about that little bit of a hassle. So that's the only concern. But Manav, you want to come in on the charts? And frankly, as we speak, Bajaj Finance is really you know, taken out 9.3% now at 2275. Big gains out here. But we're talking about OMCs, BP, HP, IOC. Does anything look good for us?
See, at the current levels, IOC definitely stands out, you know, for a simple reason that the prices have formed a very good higher bottom and eventually has also exceeded its previous high. So it has formed a short-term rising channel formation whereby the stock is eventually likely to test the levels of 148, 150. If I look at the crude charts, you know, somewhere we have seen a good top out for at least a quarter or so, and I don't see crude testing the levels of 75, 78 on the immediate basis. Also, the crude has formed a double top formation with series of negative divergence. So, you know, when such kind of a formation happens, usually at least a quarter you can expect a sideways to a negative consolidation on the downside. So keeping that in place and the overall scenario, I think you know, one can take not a 1 week view but a good positional view for at least a week, 2 or 3 weeks for on the OMCs. IOCs would definitely stand out.
All right, that's the oil marketing pack. Just want to pull up an Eicher Motors. The stock, while obviously on an absolute basis right now was up just 1%, but the stock has seen a move from the lows of the day over the last few minutes of trade at 22,000. Though the stock has come off significantly on a year-on-year basis. The stock's down closer to 30%. It was trading closer to 29,000 odd from where it went down to 21,000 and has just about come back up again. But is there a likelihood of some interest building up in this counter?
Actually, the stock has seen a very sharp decline, and on the structure basis, it has violated important weekly and monthly supports. When such kind of a formation happens, you know, you may see a very consolidative move or a short-term rising move ahead, but I don't see very aggressive buying coming back into the stock. We need to see a good base formation happen. There are stiff resistance in Eicher Motors close to 23,500, 24,000 odd levels. So there is the upside is capped. I would want to keep this stock on the bay, but if I have to pick something from the auto packs, I think M&M would be the stock to look in for. The prices have seen a good decline. It's near the important monthly support channels, a good risk-reward ratio. Will not be surprised to see the stock see a very good outperformance of at least 10% in the near-term perspective.
All right, that's an M&M preference over Eicher Motors. But within the auto pack, Gurmeet, you know, what do you favor amongst the two-wheelers and the four-wheelers?
See, I think we have had a transient phase where people are assuming the transient phase and comparing it with a slowdown. You have raw material costs, there is an oil shock, there is a deferment. Yeah, so I think everything has gone wrong. For Aisha, there was a small disruption in the plant as well. I don't think so. There is an issue with the fundamental story. So I would prefer, a Bajaj right now over, despite the average results, followed by Aisha. Aisha, I think we are totally ignoring the Volvo CV piece. If you see, it's the second largest medium duty truck maker. And I think that business seems, the CV cycle is seeing a fair degree of uptake. We have had 2 launches of even on the Royal Enfield platform. I think it will take a month before we get the real feedback. This time the launch has been more calibrated after the failure of the Himalayan brand. So, so Bajaj and Aisha, gradual accumulation again, just let this transient phase, span out. I think Dhanteras would be a good trigger. That's when you get the biggest two-wheeler numbers. Yeah. Last time Hero Honda sold some, if I'm not wrong, some 1 million bikes on that day. So I think you'll get a better, whether the festive season is really, affected or it's been a bit of a lag. And a deferment because of the same.
There has been a lag for sure, right? Hormuz that day was telling us that his conversations his conversation with auto companies seem to suggest that all has not been thus, at least until the 18th or 19th of October, wasn't the best. Now let's see if there's a pickup there. But let's wait and watch what happens to those pockets. The other one, which has bounced back very strongly today, is Bharti Airtel. That stock is up about 6% now, 302. They found suitors for 6 investors, which will pour in about 1.2 billion for their Africa business. Gurmeet, small shot in the arm, is it big?
I think it's a trigger. It's not really big, Neeraj. I think because telecom has been, battered. I remember telecom having more market cap than pharma in 2007.
Sometime,
right? So I think there is an interesting study with Inam has done, and I'll try and see if we can get hold of it. They say that if 1 paisa per GB, price goes up in the data pack, which will happen since now there are 3 players, the industry profitability goes up by 900 crores. So, and if Bharti has about 35%, still market share, that could translate to, again. So I think some point of time, the fight on the usage will, it's become a content base now. They're fighting for content tie-ups, which we discussed. I think some point of time the pricing power will come. Difficult to say. So I would not, in this kind of market, I would go with something with visible earnings right now rather than betting on when the pricing power will come. But when it comes, it may not be even bad idea to, get onto the, because the upside could then be quite significant.
Interesting. Amar, do you trade Bharti Airtel?
Yeah, looking at Bharti Airtel, what we are seeing on the daily charts is that the stock is forming a bottom and close to 275, 280 levels. And also other indicators are clearly showing that maybe the stock could bounce back. But again, on the higher side, if you look at it technically, so there is a possibility that the stock could rally towards 325, 330 levels. And the short-term bottom seems to have been formed for this particular stock.
Okay, that's Bharti Airtel. Should pull up another stock, Graphite India. The stock up until a few days back had 5 or 6 straight days of upper circuits, which is open now, and in fact now the stock almost on a daily basis has been seeing a decline. Today the stock's down about 4%, but if you see on a year-on-year basis, the stock is giving you returns of closer to 104%. So the stock is really in fact doubled in terms of their the pricing performance. Manav, what's the sense here? How would you in fact trade this stock at the kind of prices?
No, in fact, I think it's time to, if you're making good profits in it, it's time to get out of the stock. Simple reason, the price has formed a very strong lower top formation to its previous high at 1150. So there is an early signal of a change in the overall structure, and the prices have also breached its important weekly support. I think on the upside, 950 to 970 would be a very stiff resistance where some selling pressure is likely to come, but it opens the lower gate for the stock to test the levels of 800 and even much below. So there is much more of a downside into the stock, and we've seen the stock being quite volatile in nature. So when it comes for the stock to, once if it breaks the support, you may not even get time to exit. So this is the good time in case if you're making some profits, move out of the stock.
Okay, that's Graphite India. Anything else, Amar, that has caught your attention in the last half an hour of trade?
Yeah, one can look at LIC Housing Finance. If you look at LIC Housing Finance, this stock continues to be on the sell, and today it has also corrected. And technically, if you look at it on the intermediate as well as the long-term trends, that continues to be bearish. So any pullback in the stock towards 413, 415 levels, that can be a good level to short with a stop loss of 427 and a target of 385 on the downside.
Okay. Let's look at some other stocks which have bounced back and bounced move up in the last few minutes of trade. Actually, Oberoi was anyways doing well, and I think it's inched up further. So do look at that stock. That's about 8% higher, and just a bit of a spike in the last few minutes of trade. Astra Microwave has some gains, but okay, ignore that. Ashoka Buildcon, some movement in the last few minutes of trade, but those sharp moves are few and far in between at the broader end of the spectrum. It's essentially restricted to the large cap space. Bajaj Finance is up a whole 10%, 2290 and counting. Would you buy Bajaj Finance at these levels?
Yes, Neeraj, I think
at these levels.
Yeah, so I tell you,
after the 10% move.
Yes, absolutely. Okay. So reason being, we keep comparing book values, and we say that globally the book values for lenders is 2 times, 1.5 times. I was comparing Wells Fargo 10 years with Bajaj Finance. So again, not an apple-to-apple comparison, but since global benchmarks are used now to define the attractiveness, the asset growth is about 5% in last 10 years. Bajaj Finance has an asset growth for last 5 years, a CAGR of 36%.
Yeah.
And the management says that next 3 years, and my NIMs are 10%. My return on assets are, the highest in the industry. So I think, a model like this will command premium. And the broader thing, I think, if you look at the savings pattern in India, there's a dramatic shift there. We were at 25-26% savings about 5-6 years back, 7 years back. We are now probably lesser than 20, and now so we are seeing a credit-driven consumption kind of a story playing out. And I think Bajaj Finance, with all this crisis in NBFCs, the better ones are going to emerge out stronger. Always happens.
Yeah,
and,
but would you pay it 7 times book? And in a scenario wherein some of the, or 6 times book, let's put it. Actually, I would argue it's probably about 6.5, 7 times book, right?
Yeah.
Would you pay a 7 times book for a player when some of the others are which were at 3 times are now probably 2 times or thereabouts?
See, relatively, I don't see a model comparable to Bajaj Finance in the NBFC space. So if the model itself is, I'll pay a premium. But as I said, my underlying thing, if they can grow assets at 30%,
which he said yesterday.
Yeah, which I think so I'll be comfortable doing that. And if you get a 20-30% price correction in a quality name, you will gradually, add that in your portfolio.
Probably a similar comparison to the mid-cap IT names that you yourself had pointed out some time back, whether or not you would invest in a Persistent which has gone down from 13 times to 11 times versus the Mindtree, which is still trading at those elevated P multiples.
Yeah, so, well, again, the question mark about valuations all the time, but somehow across the board you see people very comfortable buying a Bajaj Finance. And the management commentary yesterday, I mean, what I quite frankly liked about that commentary to us yesterday was that the management saying that we are not going to go out and grow more aggressively because there is an opportunity. Yeah. We'll only grow at a pace that we are comfortable with. Yes. And in fact, if we are not comfortable,
the risk,
we will come off as well. Which just shows that the management is not out there just trying to grow fast, the book fast. I mean, they want to do at a manageable rate. But yeah, the stock is doing really well today, up about 10%. As we speak, Bajaj Finserv, probably because of that SOTP valuation that gets embedded into it because of Bajaj Finance's holdings, has also moved up about 4% because the numbers at Bajaj Finserv were left a bit to be desired. But do you trade them, Manav? A Finserv, we all speak about Bajaj Finance. Finserv has had a good move intraday today. Would you trade it?
Yes, in fact, when we are looking at the chart of Finserv and Finance, both of them are showing a similar structure whereby the Finserv also after a decline is bottoming near its important long-term averages and has important intraday support at 5,300 levels. So, if someone wants to take a bet of or 2% on the lower side just to gauge the momentum, I think it's all done because the volumes, when we look at the volumes also, very high volumes in last two trading days, clearly indicating some sort of a reversal, at least on the short-term time frame. So I will not be surprised to see this move carry forward. Even you can see some further more upside legs. So an upside of 5-6% will definitely not be ruled out into this.
By the way, just want to mark one stock and 2 stocks. One of them, my producer pointed out, Sonata Software has lost quite a bit in the last few days. But on news, Cadila Healthcare is down about 6%, and I think it all stems to the conversation that the management had with us, wherein they said that for this asset, they might be a combination of them putting in some equity as well. And that is not something that would have sat down well with investors, I reckon, because the stock is trading at the lowest point of the day on volumes which are higher than the 20-day average as well, Devina.
That's the stock volumes of 2.25 million on Kerala, 354. The other one is Asian Paints, and we just spoke to Harit about the sector as a whole. Asian Paints is up about 4.5% right now, closing in on the highest point of the day, 1190 on the stock. Yesterday the stock was down 6%, but today I guess the overall market mood itself is a bit more accepting. So looks like the stock has seen some amount of buying at those levels. Amar, Asian Paints?
Yeah, looking at Asian Paints, it seems that at least Asian Paints now definitely has a respite, and the low that it had made yesterday, 111,8. Now that should act as a very crucial support, and it could also be a short-term bottom for Asian Paints. But what we need to remember is that Asian Paints, from an intermediate-term perspective, it is still, I would say, on the sell side. Long-term is strong. That's the reason the stock has bounced back. And the levels that one needs to watch out for Asian Paints, I would say, on the upside is 1250, 1260, because that's a crucial resistance zone for Asian Paints. But yes, if 1100 levels hold, then the stock could witness some decent upside.
All right, Gurmeet, one last question before we let you go on, how exactly are you approaching the earnings season now, whatever is left of it? And amongst the mid-cap IT names, I think Mphasis is the other one to watch out for. What is the anticipation there?
So as far as the the broader indices goes, we are seeing there's also some low-hanging fruits which we are advising clients to latch onto. So if you see today, on the debt side, your repo rate is 6.5%, and your 6 months CP CDs are at 9%. So that's 2.5% spread between your overnight rates, and doesn't stay like that. It's usually about 70-80 basis points. This is actually more than 2013 levels. So we see the spreads compressing when the normalization returns. So if you get into an ultra short-term kind of, or you buy some CP CDs, you get a 9% kind of a yield with a possibly 1.5% capital gain. So that's a low-hanging fruit. So you're not really asking investors to get into an index and take a call on a particular index, whether broader indices or banking. And we prefer large cap IT over mid cap IT because, as I said, the valuations are same. We see a deal win momentum in lot of all three big which have given results: TCS, Infi, HCL. The BFSI vertical is contributing. For HCL, the infrastructure is contributing. And the cloud and the digital part is also doing fairly well. So prefer large cap IT over mid cap IT.
All right, got that. Gurmeet, we'll let you go on that note. Thanks so very much. It was a pleasure having you in the studio. Well, on that note, it's time to take a short break on Countdown. On the other side, we'll get you the list of Fab 4 stocks of the day, and at 3:15, we'll tell you what dealing rooms are recommending.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but policy समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities, और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर जनरेशन की पसंद.
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate, and genuine help for shoppers looking for the best new things on the shelves.
It's not about the award. It is about standing out. It's about being a giant even if you're really, really small. It's about picking the leaders of tomorrow, today. It's not about the award. It's about competing.
It's about an unbiased, countrywide, face-to-face consumer survey that is unique and provides relevance and differentiation. Essentially, we're adding something to the marketing arsenal of product teams.
It's about doing one's best and raising the bar each time.
So it's about the end customer. If you have that clarity, what is this need that you're trying to solve for the end customer?
About exceeding expectations. About going all in. Coming. Product of the Year.
It's about feeling good that we are associated with Product of the Year. This is our 10th year.
30 years of finding brands that capture a billion.
Welcome back. 26 minutes left to go for market closing. Let's quickly take a look at what the indices are doing at this point. So after briefly once again breaching the 10,200 mark on the upside, we've sort of tapered off from there, but just closer to that region. 0.5% higher on the Nifty. The Sensex is up 1/3%. Nifty Bank is also up about 1/3% currently. M&M Financial is up about 7%, so that's a strong move on the counter this afternoon. RBL Bank is the other one. Strong show. The stock's up closer to 6.5%. Repco Home Finance, that's up 4.5%, almost 5%. Apollo Tyres is up 4%. IGL is up 4%. Siemens, Indiabulls Real Estate, Voltas are some of the other names that are showing you some good gains in this afternoon's trade. But before we move on and talk some more with our guests, let's find out what has made it to Nikki Mirchandani's list of Fab 4 stocks this afternoon. Good afternoon, Nikki.
Hi, Devina. I'm going to start off first with Tata Metallica, where the company has reported good set of numbers. It's going to be a 9.5%, 10% jump there. Top line growth is almost 20% uptick. On bottom line, it's a 40% uptick. And operational performance of the company has risen more than 25%. Second in the list, we have Bhartiya Airtel, where the company has decided to be raising around some $1.25 billion by selling off the African business. And you have the global investors like Warburg Pincus and SoftBank investing into that. Third in the list, we have OMC, the HPCL, which has risen as much as 8% in trade today on back of falling crude prices. Fourth in the list is Oberoi Realty, which is up for third consecutive session in a row after reporting good set of numbers. Back to you guys.
All right, Nikki, thanks very much for that. Amar, M&M Financials at 400 right now?
Yeah, looking at M&M, if I look at M&M Finance, what I see here is that this stock has bounced back, and there is some bottom formation for this particular stock because in the first week of October it had made a low around 350 and it has bounced back, and also there is bullish divergence on the daily charts as well as the long-term trend. I would say the long-term trend also pointed out very strong support at this for this particular stock. However, what I see is on the long-term charts, that is the monthly charts, it has upside resistance coming around 420 levels or so. So that could be a level where one could book profits, and from where we could witness some selling pressure coming in this particular counter.
All right, Anand Tandon also is joining us on the show right now. Anand, how are you approaching the market currently in terms of the overall perspective, and how should one position themselves?
Well, if you are looking at the very short term, because we are getting into the expiry week, all kinds of gyrations can be expected. And given that the near-term market looks oversold, it's quite possible that you may see a bit of an upside. However, I would still be a little circumspect on the overall scenario. I think while there has been some improvement because of the erosion in oil prices, I don't think that we have seen the worst yet, and it's very likely that the oil may perhaps go back a little bit up again. More importantly, the earnings will look likely deteriorate a bit because of the kind of feedback that we are getting in terms of the near-term festive season, especially on the consumer discretionary side. So overall, I think the market at an index level still looks somewhat expensive.
Yeah, and frankly, just look at the way the market is bifurcated between pockets. So while Bajaj Finance is doing what it is doing, RBL Bank is doing what it is doing, it's up 6%. Edelweiss is still down about 5% in trade today. That's the third top loser on the Nifty 500 on a day, and the market seems to be largely okay. Emphasis is still down about 4%, but essentially I was trying to bring out the bifurcation between the financials names. So Edelweiss, Yes Bank, etc. continue to grind lower, whereas some of the likes of Bajaj Finance, etc. have gone up in trade. Anand, the numbers from the cement pack thus far have not been encouraging. The commentary or whatever little we've gotten out of it from at least the top 2 out of the 3 cement players doesn't quite paint a really rosy picture. Ultratech may have sounded slightly positive, the others quite haven't. And we haven't even gotten to the mid-sized companies as yet. Would you stay out of the picture right now despite this whole promise of infrastructure?
Well, if you look at the infrastructure stocks themselves, they have been sulking and very badly. So clearly all is not well with infrastructure. That said, volume growth does seem to have come through, even in the cement business. I think it remains a very regional market. Large, broad brush upside is not likely. However, Central India does seem to be doing a little better. So there may be a few smaller companies. We'll have to see how the results come through. But those which are based in Southern India, Central India, should have been able to take some price increase as well as increase in volume. But at a macro level, clearly the numbers are not very exciting, and price increases will still be some distance away.
Anand, what's happening with some of these brokerage stroke diversified financial services, the likes of Edelweiss, Motilal? There's been a continuous fall now. Five straight days of a sharp correction for Edelweiss. It may have bounced back till 180, 185 recently, but it's come off very, very rapidly. Motilal is sub 600. I think IIFL Holdings hasn't had the best time either. Why is the market so circumspect about these names? Because the housing finance names have bounced back, but somehow names like Edelweiss and Motilal aren't.
So there are 2 issues here. One is, of course, if you look at the brokerage business, that is obviously going to be in a bit of a down cycle right now. With serious losses being made at the retail end, it's very unlikely that the volumes are going to pick up. And obviously, leverage has been cut as well. Most brokers would have pulled back some of the money, given that their NBFCs are somewhat strained in terms of liquidity. So that part of the business anyway will take a while to recover. The NBFC part of it is a different issue. As you are aware, there is a liquidity problem with NBFCs, and except for Bajaj Finance, which has gone ahead and said that they will still grow 35%, I think many of them will find it difficult to grow for the simple reason that they'll either be selling off some of their portfolios to raise immediate cash, or the mutual funds are unlikely to roll over the CPs. And CPs make up almost perhaps just under a quarter of the total balance sheet of the NBFCs in general. The difference between housing finance and NBFCs in general are that at least housing finance has assets which can be pledged or sold against. Whereas typically consumer finance loans are a lot more difficult to get rid of except by securitization, and there isn't much time to do securitization right now. So I think, even if you were to assume that the RBI or government finds a way to ensure that there is a window to provide liquidity, what will you provide the liquidity against on the asset side? That is a question that I think will bug many of the non-housing finance NBFCs. That said, most of the smaller housing finance companies also have a negative ALM, so that's going to be a problem as well in the near term. So if you have to be investing, I think the stable way to do it would be to look at the larger housing finance companies, or perhaps look at only the banks where this CP business is not an issue at all.
Yeah, as I said, these stocks, at least the brokerage names, are getting clobbered as if there's no tomorrow. I mean, I think the only difference, viewers, and something I believe Anand Tandon will concur with me, maybe I'm wrong, maybe I'm presuming too much, but to have a conversation about how, for example, I'm using Edelweiss as a barometer, that Edelweiss was at 315 and now that it's fallen to 135 and therefore it's cheap and reasonable. That may not be the valid argument because you don't know what the actual value or the value of the stock was. It may have gone up to 315, but that did not have been the right value in the first place. Anand, the business models are not shutting down though. Do you reckon that at these levels, or maybe once the fear dissipates a bit, there could be some value buying that could come in? I mean, and again, I don't know where is value within these companies, but do you believe some value buying could come in? If not now, then maybe 10, 15, 20, 25, 30% lower?
Well, at some stage, certainly these are not companies that will disappear. But that said, as you pointed out, they have also gone to stratospheric levels. If you were to look at most of these NBFCs, they probably doubled in the last 1 year. There isn't that much which you could justify as a kind of business increase to justify a doubling of the share prices. So, if you've given back much of the euphoria, I think that is only a good business. Now, the real question is who will be the ones that will come out of it without any issues in terms of being able to do repayments and so on, and who can continue to grow. Even if you assume that there is some reasonable growth of 10 to 15%, the valuations of 5-6 times book value just don't sustain. So, you would get back to a more sedate, perhaps 1.5 to 2 times book value for some of these NBFCs, at which point there would be definitely companies which you want to have in your portfolio, because overall the growth continues to come through, especially on the consumer finance side.
All right. Manav, do you have a call on any of these NBFC / brokerages?
See, looking at the chart for Edelweiss, since there was already a discussion going on, when we look at this chart on a weekly, monthly perspective, there has, the stock has breached decisively the crucial support levels and the structure of the stock has changed. So even though if there is a bounce back from the current levels towards the levels of 160-65, the question is whether the stock will not see any further selling pressure. So at the moment, the only scenario is if somebody who is very aggressive and wants to play on the long side only, since the stock is in deep oversold levels, maintain your strict stop losses, or else I think there are better stocks to be invested in. We had already discussed in stocks like, there are good NBFC stocks at oversold levels, stocks like Canfin Home, which is forming a good base, there are good volumes built up, and even DHFL. So I think if I have to take a bet, I would rather go for those stocks. But in all NBFCs, I recommend strict stop losses because of its current volatility.
All right. Emphasis has recovered from the lows of the day. So stock was down about 7% in early morning trade, sub 1,000. Now is once again making its move on the upside. It's 1,027 for Emphasis. We'll talk about that and more. But time now to bring in Darshan and Yatin to take us through what they've been hearing from dealing rooms this afternoon. We'll start off with you, Yatin.
Well, Devina, in general, the activities are quite volatile. Dealers are, usually staying away from big trading positions. Adani Port also, they reported a strong second quarter, slightly above the street expectations, and despite that gap up opening, we have the stock which is quite weak in trade. So dealers do indicate that at higher levels, domestic funds are sellers in trade. In fact, it is almost 15-20 rupees just away from the 52-week lows that it made recently. So Adani Ports dealers are recommending selling on higher levels, and do watch out for Bharti Airtel. Okay, that stock is up 12%. When I was speaking to a few dealing rooms, the stock was up 4-5%, so good gain coming in for Bharti Airtel. Dealers recommend a BTSC strategy based on FNO trends, but Darshan has a few more stocks to talk.
Yeah, so one of the counters which came out with numbers today is Jubilant Foodwork. It's absolutely flat in trade, no surprises as far as number is concerned, but there are concerns on growth now, given everything came in line, so there could be muted selling pressure to the muted queue. MCX is another counter which is up almost 12%. The NSE deal buzz is very, very ripe in dealing rooms, despite a strong number and nothing coming out of there. Remember, the board meet of NSE will happen in a couple of days, so the buzz in dealing rooms is very strong of a potential deal between MCX and NSE. And Oberoi Realty is one of the very few real estate counters which has managed to do well. Of late, real estate has been doing well. Oberoi Realty came out with a strong set of numbers, again up 10%. Some of the domestic funds are accumulating.
The sharp pullbacks out here. Darshan, thanks a lot for that. Sorry, I don't know if you wanted to refer to a stock, but the one that
just the market in general is pulling.
Okay, yeah. So let's start with the market. That's the bigger one. It's that close to 1% up as well. But maybe not just look at the gains. I mean, Bharti Airtel in a matter of what 5 minutes has moved up from being up 5% to being up 10%. Look at that spike. Bajaj Finance is up 12%, 2331 and counting. OMCs have stayed steady. Asian Paints is up 4.5%. The big boy HDFC is up 3.5% in the session today. There's some strong moves here.
But you know, if you'd actually look at the market itself through the morning, I mean, it's actually in this range gone up and down quite a few times. So for an intraday trader, it might actually have been very volatile time to take a call on the index per se. But yeah, making that approach under 10,200 once again, now climbing back towards that 10,250 mark, but looks like the end of the trading session, the mood seems to have turned around from where we started off the show, because when we started off the show, the Nifty was absolutely flat. In fact, it just marginally moved into the red, and now we're once again trying to approach the highest point of the day. And that's probably something that we discussed with Manav at the start of the show itself regarding the pickup on the index, taking support of that cluster, Manav.
Absolutely, and in fact, when if you just look at the charts right now, we were minus 20 points and we are right now at plus 85. You know, the index has formed a bullish hammer formation. I think by the EOD that formation would be completed. What it clearly justifies a very sharp reversal from the lows, and it forms a very big lower shadow, which further confirms and gives a bang on. Okay, you know, now this is a short-term bottom in place, so it's adds another further confirmation to us. And the highs, once if it is crossed, you will see further short covering coming into the system.
In fact, should pull up the turnover to see how the volume picture has been shaping up, how the turnover has been shaping up on the cash as well as on the F&O side. So, you know, a pickup ahead of expiry, you are going to be seeing that number, but it's relatively high for a non-expiry day. It's at 12.77 already. We're still about 10 minutes left to go for market closing. NSE cash also around 31,640. You'll probably see that number somewhere closer to 32.5 or so. BSE cash though slightly more muted.
Yeah, well, a bunch of those stocks. Just before we get in closing strategies though from our experts, one more set of stocks that I do want to highlight. You know, we've spoken about the gainers. Yes Bank as a stock has lost out quite a bit over the last few days. And then there was a brief rally. I'm not asking for a buy or a sell here, but there was a brief rally in Yes Bank from those abysmally low levels of 170, 180, where it will be trading at at valuations that it hasn't traded for a really long time, in the hope that there could be some extension. Now that it's out of the window, do you reckon that these valuations are where Yes could grind until the new management comes in, and if there are skeletons that have to come out, will come out and the market will know about them?
Almost definitely. I think typically when you do have a management change, and that too if somebody were to come from outside, it's very likely that there will be a bit of spring cleaning that will happen to the portfolio. Especially considering that the current management, especially the current CEO, has been holding on to the bank for a very long time and has been driving the growth personally in many of the marquee cases. So there would be some things that may have to change there. Once that is out of the way, given the fact that it's a bank, obviously, you know, probably it will come back into the picture in terms of investments. But as of now, I think for a corporate-facing bank, you're probably better off looking at an ICICI or a State Bank, or maybe even an Axis Bank.
Okay, let's take in some closing strategies first from our experts. Amar, to you first, your top closing strategy?
That one can look at TCS, which I had talked about earlier as well. So TCS is one stock. There is a possibility that the stock can bounce back from the current levels. So one can buy TCS with a stop loss of 1809 and a target of 1937 in the short term, because the stock has taken support around crucial levels. So there is a possibility that there could be short covering in this particular stock.
Manav, what about you?
I have one stock which is HDFC Limited. You know, the prices have seen a very good bounce from its oversold levels, and it has formed a double bottom formation. For the immediate basis, yes, definitely the stock can see a good run up of another 3-4%, but I will not be surprised to see HDFC back to the levels of 1850. So one can maintain a stop at 1700 on the lower side.
Okay. You know what? We're finding some other names and in different names moving up as well. Pull up EID Parry and see what that one is doing in the session today. Should come up on your screen. That's one up about 6.5% and good moves there. Wonder if the other sugar names have done well too. Balrampur Chini, not just marginally higher, not so much. So it's not across the board. It's just that EID Parry has those specific moves to itself in the session today. I've been impressed with this whole ethanol and the sugar program, Anand. Is there merit in owning this space or trying to own this space?
Well, given where we are in the market right now, I think it's probably too small a sector to worry about. It's probably better off, given that there has been a severe price erosion in many, marquee sectors, to look for opportunities there, because that's where the big moves will come whenever the market turns.
Okay. Let me ask you then about mid-cap IT. The stocks have come back to some bit of normalcy after stratospheric valuations again. It was par for the course correction. Can there be more, or do you believe that growth numbers justify being at in or around these valuation multiples? Mid-cap IT in particular.
Well, I don't see much downside from here for many of them. I think the corrections, wherever the results have not been in line or along expectations, have been fairly severe and are pretty much reflecting whatever is known currently. And by most counts, it would appear that the business environment has improved. And of course, there will be an improvement in terms of the currency. So looking out over the next 12 months, I don't find that the mid-cap IT is either particularly expensive or particularly challenged in terms of growth opportunities. I think you will get somewhat, early double-digit kind of growth numbers for the most part. And the valuations are reflecting that. So again, not great reason for it to go up, but if the market were to move up, I think these companies also will move up in sympathy.
All right. Anand, anything in particular that you're liking?
Well, there appears to me a lot of value now in some of the small cap companies, but given where we are in terms of the liquidity constraints, I think that they will not particularly perform, at least in the near term. I think what we really need to wait out for is to see how the NBFC issues pan out and whatever RBI can do to ease off liquidity. If and when that happens and there is no further negative in terms of the macro, that would be the time to buy. Remember, we still have too many other shocks waiting, both political and economic. So there is no particular hurry in my view. These kind of up and downs, because of the fact that we are in the last stage of the expiry, should not suddenly mean that you have to turn bullish.
All right, got that. Anand, we leave it at that. Appreciate you taking out the time and joining us on the show this afternoon. A few other names that are holding steady include the likes of an REC, which is up about 4.5%. Shriram Transport is up 5% in trade right now. Then you've got the likes of a Bosch, which is up 4%. BHEL is up about 3% and HCL Tech is up about 3.5% as well. Manav, you tracking HCL Tech at 985 right now. I mean, just a few months back, it was closer to about 1100 odd, came off from there fairly quickly.
See, the prices have actually recently declined and tested its important crucial support levels. We have seen, often when the prices test its long-term averages, there is a good short-term pullback that eventually takes place in the stock. The stock has been in a very good long-term primary uptrend. So an important support, as long as 950, 960 levels are held, I think the prices would regain and test the levels of 1050 once again. The volume built up even at the current levels are indicating that at least a short-term bottom could be in place. So one can look to initiate long positions. Also from the IT space, I think Wipro is one stock which is likely to see much more of an outperformance. The stock has seen a good breakout on the weekly and the monthly perspective, and the trend is still intact. So I sense another 10% upside, but if I have to pick one, I think Wipro would be the pick from the IT space.
Keep in mind, Wipro has results coming out, so that's a bit of a trigger that you need to monitor. A stock that's bounced back, and Amar, I want to come to you on Dish TV. Sharp up move in the last few minutes of trade. What do the charts look like?
Yeah, looking at Dish TV, if you look at this particular Dish TV, the stock has been on a significant slide from almost 70 odd levels to currently trade around 44. And technically, I would say that on the weekly charts, it continues to be extremely bearish. Even on the long-term charts, it continues. So this is just, I would say, a temporary respite for this particular stock. I wouldn't at least be interested in buying this stock.
Manav, just one quick question. The real estate names, Godrej Properties, Oberoi Real Estate, how do the charts look?
See, if you're looking at the chart, Oberoi definitely stands out. You know, the stock has seen a decline from the highs of 610 levels and has tested its long-term averages. Most importantly, the last 3 days have seen very good volumes and the price breakout, which is indicating that the stock is, seems to be bottoming out, at least on the short-term perspective. Once if the stock manages to sustain above the levels of 420, we will eventually see the levels of 465 to 480. So if I have to pick something, I think definitely Oberoi stands out even at the current levels, has important support at 415 on the lower side.
Okay, stay on, gentlemen. We'll take in final thoughts from you, but here's how the markets are shutting shop today. Quite the contrast to what was happening in trade yesterday, but in the green and trading in or around the highest point in the last 5 hours, at least, if not the day, because we started off about 1.1% higher, but doing okay for ourselves. The Nifty Bank about 0.5%, not bad too, and the mid caps and the small caps about 1.5% apiece. So good market breadth today, and the latter half of trade, especially the last 2 hours, have been fairly kind to us. So Devin, I'll bring you up to speed with what's happening at the mid cap end of the market. Let me talk about the large caps, and well, good strong gains. It looks like the mid cap index, but it isn't. It is the Nifty. Bajaj Finance 11%, Bharti 9.5%, HP, IOC, BPCL all in the green. Some gains for Hindalco and Asian Paints too. Bajaj Finserv about 4% higher, IDFC about 3% higher. So good gains here for a clutch of these names. There are losers though, by the way. So Bajaj Auto, result reaction down. Yes Bank, the disappointment continues. There's some weakness for Adani Ports after the numbers and the small miss. And IT continues to remain on tenterhooks. Infosys still down about 1%. Wipro just about breaking into the green. The others also fairly lackluster. So there's a bit of pain in IT continuing in the session today. But all in all, a day of gains. And similarly for the mid-cap space as well, Devina. NBFCs out there, a clutch of other sectors out there, lots of gainers.
Well, in fact, like you said, NBFCs actually are ruling the roost right now from the mid-cap and the small-cap space. Can Fin Homes being one, just want to quickly highlight that. One on the back of numbers as well. The stock has done exceedingly well in today's session. 12.5% higher for Can Fin Homes at 249. Not just that, even a Repco Home is up in the same light. So both these stocks have done exceedingly well today. Repco is up closer to 4.5%. Within the real estate pack, it was a surprise move from Oberoi Realty. Remember, the numbers were exceedingly good, and yesterday's session saw it move up closer to 3.5–4%. Today you saw a big surge of 10% on Oberoi Realty, taking it to 435. Group Finance and M&M Financials, again in NBFC pocket, are up about 7.5 to 8%. M&M Financial closer to about 7% at 400. On the other hand, Jubilant FoodWorks that reported its numbers, not very exciting. So towards the end of trade, the stock ended lower by about 0.6%. RBL Bank from the mid-tier banks did well for itself in the afternoon session, 5.5% higher. Other disappointments in terms of results, Assassin Technologies, that's the stock which saw a cut of closer to 13.5% by the end of trade today on disappointing numbers. Emphasis is still yet to come out with results, the stock's still ending, and the entire IT pocket seems to be out of flavor, suddenly down 4.5%, but still not at the lowest point of the day. It was down 7% in early morning trade. Kedila Healthcare is also down in the session. By the end of trade is 5.5% lower. Edelweiss is down in the session. You've got RAC and Avenue Supermarts as well. Two other stocks to watch out for as we short trade this. Edelweiss, in fact, picking up from the lows of the day, so a sharp pullback towards the end of trade. Not at close for trade, but yes, by the end of it, Avenue Supermarts 3.5% higher, and Edelweiss pulling back and ending in the green. But overall, Neeraj, it's the pickup in the turnover and the trend reversal that we saw actually just the last 40–45 minutes of trade.
Yeah, it's been interesting, and actually since Devina spoke of the turnover, let's get the turnover first up on your screen, and you will see that the F&O turnover is certainly substantially higher than what we see usually on a day like this. Yeah, 13.5, almost 13.5 lakh crores. Even on the NSE cash, 33,600 odd crores. Remember, you're still, this is not the expiry day, so for a non-expiry day, this is on the higher side, but we'll wait and watch. Hopefully the rollovers would have also picked up on the index futures. But let's quickly take a look at what the broader market is in the market. Bread should come up on your screen. A significant amount of movement throughout the day as it had its peaks and troughs. But towards the end of the trading session, almost at an even
even keel for both the advances and declines.
Yeah, the market breadth has been okay, and the contributors will come on your screen. I want to see if HDFC is finding its way. Yes, HDFC is at the top of the pile simply because of the weightage that it carries, but Bajaj Finance right up there, Devina, and Bharti, not a surprise out there because of the 10% move.
Yeah, on the losing side, not much in terms of the percentage loss, but still one of the top losers, Reliance Industries. Yes Bank continues to grind lower. Disappointment from the numbers for Bajaj Auto, and that's been punished a bit. And Infi, along with the entire IT basket, also really under some bit of pressure.
Yeah, so all in all, not a bad day of trade. Let's see what happens during the course of the day. Just before we get to our experts, maybe pull up Europe and the Dow futures and just see what's happening to those markets as well once before we get in final thoughts from our experts. So should come up on your screen what the European markets are doing. Well, a tick of green across the screen. Dow futures should also come up, and whether the crude fall is aiding sentiment all across or no. No, not so much for the Dow futures. For now, looking slightly soft. But final thoughts from our experts. Amar, how are you approaching the expiry tomorrow?
I would say that the way the market has closed higher shows that there is some buying interest that is coming up. But again, at the higher levels, as I said, 10,300, 350, that's an immediate level of resistance. So one should watch out around those levels, because if that level is not taken out, we could witness some short positions being built. So it's going to be a volatile session tomorrow. And on the downside, again, I would say 10,100, 100, 150, that's a crucial support zone. Technically, on the daily charts, there is some sort of decline in the trend, downward trend strength. So that's the reason we are seeing this consolidation in choppy trading session.
Okay. What about you, Manav?
See, the markets, has formed a very good base at the lower levels. I think for the expiry tomorrow, one can expect closing close to the levels of 10,400. If the market sees a gap down opening, one can look to also sell 10,000 puts. So, this would be the strategy going forward. But I think one also has to keep in mind that, since we've declined sharply and November expiry, we expect at least to be close to the levels of 10,800. So, one needs to gear up and be ready for long positions.
You're saying 10,400
10,800.
by tomorrow?
By November expiry.
10,800
would be the next expiry.
Which is okay. I heard 11,800. I was flummoxed as to how is it that you are so bullish. Well, turn out. It's Diwali month, so you never know. Yes. But anyways, Manav, Amar, thank you so much for joining in today and giving us your thoughts. Appreciate your time. And with that, it's a wrap on this leg of Countdown from Devi and me and the team that put this show together. Thanks so much for watching.